Crypto Hotep here with another investing video. We are on week 73 of the Family Portfolio and Dividends Tracker. Now, if you are unfamiliar with my videos, feel free to go to the channel, go to week number 1, and that's where I go through my whole methodology and why I'm doing these videos. So basically, I'm documenting the investment journey with me and my family. I shortlisted some stocks and companies that I did some research on, and I had my family pick stocks and companies that they resonated with. And then we proceeded to use M1 Finance as our broker of choice, because with M1 Finance, you can have a big portfolio and then have sub portfolios or pies within it. So every one of my family members has a pie of his or her own stock choosings, and then every week we go through this portfolio. We discuss market trends, any market news, any earnings, any dividend activity, balances, how we're feeling about the market, and then that way this documents the whole investment journey. So hopefully it'll be helpful for my family whenever I'm gone, and they can either carry this on or they can at least be educated about investing as a whole. If you find these videos helpful at all, feel free to like, subscribe, comment, share it. Basically do anything to interact with this video, because that does help out the algorithm and that does support the channel. But by no means is this financial advice. With that being said, guys, we can jump in. But before we go to week 73, we always go back the week prior to week 72 just to see where we were at. So week 72, it saw us hitting a balance of over $2,900, $2,917.03 to be exact, with a market-weighted rate of return year-to-date of 8.29%, dividends earned of 18.91%, and a market gain of $164.38. So let's see how we're doing. And again, thank you guys for supporting the channel. This video got over 200 views. That's fantastic. That's great. And I really appreciate the support. Let's go to week 73 and let's see where we're at. So week 73, we hit another milestone, $3,000. So we're $3,000 plus, $3,023.09. That equates to a money-weighted rate of return of 9.66% year to date. Dividends earned of still $18.91, but now our market gain is $196.15. So let's see what we have going on in the activity. So between this and last week, we had a deposit. We were blessed to have a little extra money here, and we threw it in the market for our family here. So we had about 51 bucks. Now, if this is your first time watching the video, all the deposits that we do in this account, this is a small account, so we have small deposits. It's normally every 2 weeks. It's about 15 bucks or so. Now, if we get an extra pay, maybe an extra bonus, anything like that, then we'll put some extra money in there. But for the most part, it's about 15 bucks or so. So we did get an extra bonus here, and we threw the money in the market so it can do what it does here. So with that 50, this is what we bought here. We had 12 buys. We bought some Starbucks, Domino's Pizza, Cintas, Google, Microsoft, Amazon, Moody's, Costco, Apple, Tesla, Target, and Waste Management. And I'll show you guys how I normally buy these stocks. It's very easy with M1 Finance. We also did have one buy. I think we had like $1 left over, so we bought some Microsoft, just $1 worth. And again, you can buy fractional shares. You don't have to buy the whole share of a company. You can buy fractional shares, so don't let that deter you from investing. And then we had our regular deposit of $15, which is right here. Okay, in addition to that, we also had an additional deposit. We got an extra bonus again. We're blessed to get that. So combined was about 25 bucks, and this is what we bought. So we had 7 buys totaling $23.21. We bought Google, McDonald's, Target again, Cintas again, Costco, Starbucks again, and then Waste Management. Okay. And so when we go to the portfolio here, and we'll scroll down again, we're year-to-date numbers here. We do like to go bottom to top. So at the bottom is no longer my wife. My wife's no longer at the bottom. It is our middle. So our middle stock, we'll click in here and then I'll show you. So typically when I divvy up our monies that we are going to spend on the stocks, for instance, when we divvied up the 50, everybody got $10 basically. And when I get ready to buy everybody's stock, all I do is I come into their individual pie here and then I hit the buy button right here. And if you hit the buy button in that particular pie, you can buy stocks only inside that particular pie or my family member's stocks. So if we had $10 here, then the M1 Finance will actually buy those stocks, all dedicated to our middle child stocks, which is nice. And then it'll divvy up the $10. It'll put as much as it can in certain stocks based on allocation percentages, and it'll do all that, which is nice. So back to our middle. Our middle has a year-to-date portfolio balance of $369.74, money weighted rate of return of 4% year-to-date, dividends earned of $2.58, market gain of $7.46. So the culprit is Target. Target is bringing the portfolio down over 20% here. Starbucks is also down, not that much though, down negative 3.3%. And then Tesla, we are closing the gap on Tesla though. We are only down a little bit, half a percent here at 0.74%. But up on Google, tremendous amount, over 45%. Sony up over 27%, Costco up over 1%, and then Amazon almost 10% here. I'm not really worried about the middle stock. Target is gonna feel as though Target's gonna come around, and now that we have some shakeup in the executive leadership with Target, I'm really itching to see what they have cooking here. So let's go to my wife's stocks here. So my wife's stocks, that is not a typo either. So my wife's stocks, a money weighted rate of return of 42.82% year to date. Yes, it's serious. My wife's balance is now over $400 at $404.75. Market gain of $86.93 and dividends earned of $1.30. If you benchmark this, if you use this tool and benchmark this against anything else in the market, no other ETF, nothing is as good as my wife's portfolio right here. This is simply amazing. Everything is in the green for my wife, which again, I mentioned this last week. I saw Tesla closing the gap on Tesla, and I saw we were inching closer to being green. And I said specifically that if all the assets in my wife's stocks, if all the companies in my wife's stock portfolio go green, watch out, because her portfolio is just going to keep growing. And that's what it is. That's what it's doing right now. My wife's still over 100% on Celsius, 143%. Pepsi still up over 5% on Pepsi. Google up over 26% on Google. And then now Tesla finally in the green. Tesla is finally in the green, up over 7% year to date on Tesla. My wife's going to keep doing numbers here on this portfolio. It's simply amazing. Let's go to our youngest. Our youngest has a balance of over $400 now, again at $407.50. Money weighted rate of return year to date of 8.90%. Dividends earned of $1.56, and then market gain of $23.41. So Tesla, again, if you're looking at this for the first time and you're saying, well, Crypto Hotep, why is your wife's Tesla holding in the green, but your youngest isn't? Well, we bought them at different times in different price points. So that's why it comes out to be, a little bit different in terms of pricing and percentages. So as you can see, though, we're still closing the gap. Only a little bit over 1.25%. Not bad. But up on Sony, over 33%. Up on Apple now. We've been red on Apple. Apple has turned green, no pun intended here, up over 2.5%. Starbucks down over 2%, but Costco coming in strong, up over 4% year to date here. Okay, now let's go to our oldest. Our oldest Our oldest is also closing in the gap. I'm really excited to see this as well because our oldest is almost cracking $900 in stock. Our oldest is also closing the gap, being in the negative at year to date, negative 0.32%. And then dividends earned of 3.4 or $3.48, market gain of a negative $5.92, but we are closing the gap here. Let's see what's going on. So Apple down over 1.5 here, but again, we are closing the gap. McDonald's still holding strong, up almost 10% at 9.59% year to date. Costco up over 1.47% year to date. And then Tesla, we are closing the gap. It's still her position, our oldest position, is a little bit farther away, but we're still closing down on it at a negative 8.5%. We're getting close. Our oldest is gonna be in the green soon, I bet. And then last but not least, let's go to my portfolio. My portfolio has money weighted rate of return of 13.13% year to date. $949.60 is my balance. Money weighted rate of return percentage is 13.13%. I believe I just said that. Dividends almost cracked $10 at $9.99, and the market gain of $84.27 here. So all of my sectors are in the green here. Technology is holding the bag currently right now, up over 30% on my technology. And you know, if you are unfamiliar, I did do some consolidation on my stock holdings, and I brought my stock holdings down to about 12 instead of close to 50 holdings that I had before. So more concentrated. But here's one of the good things of being more concentrated, bigger gains here. So now we're just focused on Google and Microsoft. These two aren't going anywhere. You can see what's happening with my money weighted rate of returns here. I love to see it. Finance up over 3.75%. I like that. Real estate, which is just O, is 2.46% here. Industrials and energy, which we saw before, waste management and Cintas. Even though they're in the red right now, we're still buying them. We're still buying the dip on both of those. Pharmaceuticals, we have AbbVie. AbbVie's up over 9% here. And then consumer staples up over 2%. And then restaurants and food, which is just Domino's Pizza and Coca-Cola, we are up over 6.79%. Okay. So all in all, with our portfolio to date, year to date, we have cracked just a tremendous milestone here of over $3,000. And again, this is only week 73. We haven't even cracked 2 years yet, and we have already achieved $3,000 in this portfolio. And we started this portfolio with very minimal balance starting out. This was a very small account. I want to say it was around $300 to $400 when we started this account. And that's what I like to say. If we look, this chart is the year-to-date chart. If we go to the 1 year chart here, you even see where we've come even further. So this time last year, again, this has only been 1 year. This time last year, we had $846.31. Now fast forward this year, over $3,000. That's amazing. Our money weighted rate of return 1 year, over 20, almost 21%. So again, as I mentioned before, if you invest into good companies, and companies that you understand the business and that you follow and that you can research, then you're gonna just do fine. You're just gonna do fine in the investing game here. It's just so you don't get nervous or scared whenever the price is dipping or anything, or maybe some FUD is coming out in the news. But as always, guys, that's it for week 73. If this video was helpful, feel free to like, subscribe, comment. Let me know what you think. Please, if you haven't yet, subscribe to the channel. It helps out us. It helps out the channel. And as always, guys, thank you and happy investing.